Hi everybody, it's Jeff Fitzpatrick and this is my Monday video recording of the week. However, I'm actually recording it on Sunday evening because I'm off to sunny Scarborough for a few days tomorrow with one of my favorite grandchildren. So that'll be great. Okay, this is a very special edition. So let's get started. I strongly advise you to watch the whole of this video. I think you might be amazed by what is in it today. My first big reveal, I'm going to give you some forecasts of the performance of each of the clubs. That's a bit scary, but it is based purely on fact. I haven't built into it any sort of emotion or thinking about what happens to the market or doesn't happen to the market. It is based purely on recent performance, where we are, and the time going forward. And as usual, just a quick reminder of how I find my stocks. So first of all, I'm working with Value Line and I use a long list. The long list is based on the 1,700 or so stocks that Value Line give full reports on. And I'm looking for stocks that have got at least a 1, 2, or 3 score for timeliness, a 1, 2, or 3 score for safety, and a financial strength score of at least B+. And I usually find 100 plus of those. I then go to the charts, I go through the charts, and I'm eliminating any stock where the chart is not at a significant low and or where the indicators don't look so good. That gets me around to about 15 stocks or so. Then I'm going through all of those stocks with a very fine tooth comb, doing a full analysis on quality. I eliminate from my inquiries various numbers there. It could be 5, could be 6, could be 10, could be 12, but a lot. I'm very picky on quality. That's because I'm only want to bring in stocks that I'm prepared to have owned by the clubs. Even if I'm only going to do a short-term for-profit trade on it, a short-term put, I still want it to be a really good quality stock in case it gets put to the club, in which case I want to be happy to own it, particularly at the price that the strike price is being set at for the trade. I then go on to the next stage, which is saying, fine, that's a great quality stock. It ticks all of the boxes. The indicators look right, the chart looks right. However, when I go to the trading platform, it may not give enough premium, at least enough premium on the strike prices and expiration dates that I'm interested in. And that's how I get down to it. And later in this video, I'll show you the outcome of that for this week. Now, short-term, below current price, strike price puts. I could and should probably call them out of the money. But as when we sell calls, out of the money is above the current price, I think that's confusing. So I just talk about selling puts at strike prices that are below the current price. And I've listed out here the advantages that I'm finding. We've got these trades using lower buying power. That means I can do more contracts. The proportion of stocks or puts that come to be put to us is much lower. We can recycle the stock buying power more frequently because it expires so quickly. We've got more strike prices to choose from because on weekly strike prices, you often get a broader range. So some stock might have, I don't know, $10 and $12 or $10, $11, say, but on a weekly put, it may well have $10, $10.50, and $11. Now, of course, even monthly expiration dates become weekly for part of the month. And my experience is also now that I'm rarely doing 1 week away. I'm usually doing 2, 3, or 4 weeks away. So at present, I'm really only interested in selling puts that expire within the month of September. But back to the list. If stock is put to us, then it's put to us at a much lower price. If we've got in at a strike price that's halfway between the current price and where we think the stock price might get to, and it goes wrong, we end up with a lot of hard work to get that stock or that trade back into profit. It is much easier to turn a loss into a profit if the price that we go in at is lower. And of course, if we're selling below the current price, 100% of the premium is time value. What I'm also finding now from experience is that if we go in at these low prices, even if the trade goes against us and the stock is going to be put, it is much easier to roll it forward for an additional credit. To get out of trouble, just keep doing that until the thing gets into profit. Now, I still want to own stocks, get in at low prices, good quality stocks. I want price appreciation. I actually think there's more profit in price appreciation than there is in selling short-term puts. But I don't mind selling short-term puts to get into the stock and perhaps having several bites of that cherry before we get in. I want to be in good profit when we are into this, when the stock is put to us. I want to be in profit already. I'm also finding that this strategy is building cash. It's bringing a lot of cash in, as you'll see when we cover some of the trades in more detail. And that's giving us cash, which is allowing us to then accept some of these very good quality stocks at very good prices. The lower risk allows more contracts to be sold on each trade. And the money transfers from option drag to cash far more quickly. Now, I'd like to think there were no downsides, but there are. Two in particular. First of all, we're not getting the large premiums. So if we were selling something at, I don't know, $10 or $20, strike price is higher than the current price, then you get very big premiums. Of course, if that ends up not being put to you, it's a big win. So we're losing out on some of those, but more than making up for it on the short-term ones. And also, not every stock has weekly expiring puts. So some of them I've got to wait some time before I'm able to get into them if I don't want to do the trade over too long a period. So that's what I'm finding with these short-term put trades. Okay, so we're not quite at the end of August yet, another week to go, but where are we up to? With 1 week to go, August had, across the 7 clubs, 73 puts that were expiring. So far, 6 of them have ended in a loss, and that loss totals at present to $3,867.67. However, those ending in profit, the profit is $106,491. 10 of the 73 puts are still to expire, and as we stand at the moment, 1 of those 6 losers is included. And that may well get rolled forward for a credit before expiry next week. So we're not at the final outcome yet. And moving forward to September, I've gone a bit more large here. I've got 96 active puts so far, and all of the clubs have got buying power available. They've got buying power available because we just had another expiration date on Friday, and that has released buying power back to be recycled yet again. It's amazing the amount of buying power that's coming through. So of the 96 for September, 6, bearing in mind some of them don't expire till the end of September, are currently at a loss. The loss is high at $16,793. And however, on the other side of it, the 90 that are in profit, the profit is $161,979 as we stand. Amongst the losers, there's one big one, and that's JetBlue, where the loss is $10,773. I've got no doubt whatsoever that that will be disappearing sometime in September. It'll get kicked forward, and it'll get kicked forward for a credit if I need to do that. So let me just stop sharing this, and I'll show you the spreadsheet that I've got of the puts. And here they are. So if I start at the top, you can see I've now got the September ones at the top of the sheet. And to remind you, those with a negative sign in front of them means that they are due to be put to us, and that is the loss that is currently incurred based on the current price. Where we have this sort of mauve color without that negative sign, then those puts are due to be put to us. However, we have sufficient premium to put them in profit. So in other words, they could be sold immediately at the prices that we finished at on Friday at least, and we would end up with this amount of profit. So quite a few in diamond, the vast majority just on the normal September expiration date. Some we've even had two in the same month. That's because it was looking as if it was going against us. We sold one at 20, which is a negative. I'm already making up for that by selling a lower one and mitigating as much of the loss as I can. There's Fortune. So we've got currently 31,000 profit in diamond. Fortune, there are no actual losses in there. They've got 17,000, considerably up on last month, I think. Tees are 5,000. It's a much smaller club, hasn't got the buying power to release yet, but it's getting there. And Sapphire, one loss amongst many there, 32,000. 100th Millionaires, they've got 32,000 also, and no losses. They've been assisted by having lids. There's MXL, the lid will actually kick in and help that trade. Who else have we got? Quarterly Income Club, they're currently on 15,000. And that's where we've got that one big loss on JetBlue. I'll be getting rid of that. So that 15 will then go up to 25. And Extra Income, last but not least, and they've got 11,000 in. So there's that 145,000. But based on the end of July valuation of the clubs, that's 3.69% of a lot of money. But go further down, we can see the end of August coming up. So Diamond has got two more, both of them in profit, ended with 24,000. Fortune, no more. Their month for August is already finished. Yeah, Fortune didn't do quite so well. We'll certainly make up for that. Tees, 3,500, now completely finished for the month. Sapphire, 21,000. They've still got a few to go. Still playing with some of them there. Might be some rolling forward to go on. 100th Millionaire, not quite finished yet either. Two more to go, but 18,000 in the bag. Quarterly Income, 21,000. And again, just two in profit ones to finish. And the Extra Income Club, again, a couple of trades that are in profit to finish there. So August overall, 102,000. So not bad at all. So next, these forecasts. So I'm introducing these forecasts. We'll see how they go. So the forecasts use the percentage gain in net liquid value since the 1st of July. And that's because on the 1st of July, that's when I introduced this short-term put selling strategy. And that has been a game changer already. The forecast takes into account the fees that are payable at the end of each quarter to TICN. So these are, if you like, a net forecast. And the forecast is twofold, really. One is for the number of months needed to get to the net liquid value for that to be higher than the amount invested. The second element is for the value of the account to get to double the original amount that's being invested there. In this particular case, which is 100th millionaire, you've got the invested figure is 707,000. The current net liquid value is 814,000. So there's no months required to get to that point where it's in absolute profit. And if we go down, take into account, as I say, some of the payments off to TICN as well, we've got 17 months before we get to more than the double, which is 1,414,000, which is twice the 707,000 invested, and that's sort of month 17. So that's where we get to. Now, definitely a word of warning. Forecasts are exactly that. They are forecasts. There are no guarantees. The only guarantee I can give you is that the forecast will be wrong. We just don't know by how much or in which direction. So here comes the forecast for the clubs. So looking at our Diamond as an example here, we've got the amount invested, current net liquid value, the left-in value. So the left-in value is, of course, that net liquid value plus the option drag, which is option premiums that we know will expire and come into our possession. So they're in a position already where the net liquid value is above that of the value they invested, but the net liquid value is slightly short of it. Now, I've also looked at the value at current prices of all of the shares owned and the cash that's held in the club, in the trading account. And that is 745,000 compared to the amount invested, which was 691,000. So already, really, they're in good game. Even if we didn't get any of the premiums coming in, they'd be in gain. The run rate for from the 1st of July to Friday, the gain is 5.94%. So that's what I based the forecast on. The increase in the S&P during this time was 1.35%. So the run rate for Diamond is 4.4 times that run rate of the S&P. They've got 3 months or so at this rate of progress to get to the point where the net liquid value is higher than the amount invested, and 18 months where to get to the double figure. The club, to get to its 5-year time horizon, has got 19 months. So I've got 1 month spare here at the moment, but if I can get that 9.54 up, then I'll get a bit more spare at the end and we can get a bit of a bonus. Looking across the others, Fortune is in a pretty similar situation. Its left in values already higher than the amount invested. The shares in cash are also higher than that, pretty similar run rate of 5.2%. Also, well, 2 months to get to beyond break even. And again, 18 months, it's a coincidence this, and 20 months left to run to the horizon. We'll be keeping the clubs going after the horizon. That's just getting to that milestone, really. Tees hasn't done so well, had a lot of money put in later. It had a good increase over the period, but it needs to get its act together a little bit more. I need to do some more work on it. Tees is different from the other clubs. It hasn't got an end date. It's open-ended. We're going to run it until we get to 1 million or to some other agreed figure. Sapphire, oh dear, Sapphire, as you saw on the puts being sold for September, I'm working like crazy on Sapphire. I'm determined to get that 3.76% up. It is going up, but also it is a much bigger account. I've got 1.25 million almost that I'm working with here. So it needs a lot more trades to get it there. 100th millionaire doing very nicely, thank you. Already above the net liquid value, is above the amount invested. The left-in value is obviously above it, and the shares plus cash are above it too. And they had a stonking 8.25%, 6 times the S&P over the July-August period to date, 16 months to get to doubling of the account, and 29 months left to the 5 years. Extra income also doing pretty well, but it's open-ended because it's an income club. It'll be taking out regular quarterly withdrawals. First one is due sort of end of September, October time. It's already above the net liquid value, even though it had a lot of money put in quite recently. The left-in value's okay there. Shares and cash, again, albeit slightly above the invested figure, but again, a stonking 9 and almost 3/4%. At that rate, it won't take long to get this thing up there. It beat the S&P by more than 7 times. It's already got to the months to break even. It's got 17 months to double, but that won't happen because we'll be taking money out. And a little total here. So across the clubs, we've got 3,350,000-ish invested, and the shares and cash are above that, if not yet the net liquid value or the left-in value. So that's sort of an overall measure. The average gain was 6.5% over July and August, and that's nearly 5 times the S&P. So I've left that on sort of deliberately quite a long time to talk through it so you can note where you're at. I can do the individual figures for the clubs. So given all those figures, most of you are aware that we're working to these 5-year time horizons. So at the end of the 5th year, the intention is, subject to the members' wishes, to run down the option drag. That means that people would be able to leave, or just to take some money out, or for the whole club to take a dividend if they wish, without leaving some of that unrealized profit coming from unexpired puts on the table. Now note, the Tees Club and the quarterly income, the extra in clubs, they're open-ended, so there are no 5-year horizons for them. So looking at the forecasts and taking into account that nothing is guaranteed, it looks like a really good time to top up investments. In all cases, we've got time left before the horizon to double even new money that goes in if the forecasts work out. And I'll be working my tail off trying to beat those forecasts. So if you want to put some more money in, I would say now is a good time. If you do it in a year's time or something, then we're going to be starting to run down towards those horizons. It won't be quite as good. Okay, so my filter results for this week. Now, I don't find stocks which I consider to be perfect in every regard. I've got a couple which are not too far off this week, but here we've got my finds. And so these generally, the premiums alter all of the time, but these are worth checking out. So AOS, the value line is a little bit negative. Well, it's a bit neutral rather than negative, but it's out of date. So some of the scores, for example, timeliness, have increased from when the report was written. BAX is okay, but it has a low beta. So it's not being carried up. We say that when the tide comes in, all boats rise. Well, with different lower beta, they don't all rise quite as much. So that's an issue. And it's also got its long-term debt is a little bit high. However, as a short-term trade, I think it's probably absolutely fine. BP, I desperately want to get into an oil business. At the moment, I'm treating this as a short-term trade because it's got 4 quarterly losses in the last 3 years. I think that's just the industry. And its debt is slightly high. We like to see debt at no more than 50% of capitalization, and it's 59. But I don't think I'd be too scared of it. It's very cheap. It's sort of about $34 at the moment. Disney, its current assets and liability divided by its liabilities is 75%. That's a bit low. We prefer 100% plus. But that's the only issue I've got with it, apart from being a little bit expensive at about $90. FAST, again, long-term debt, a little bit high. That's the only issue I've got. And then GGG and MNST, I've got no issues of note. And then Otis, that is the lift company. Again, the value line report, the narrative part of it reads a little bit neutrally, but it is out of date. The scores for this stock are higher than those shown in the last value line full report. So they're my picks. Coming soon, I haven't got my Facebook group set up yet, but I will be launching it within the next few weeks. I'm not ignoring it. I'm not being lazy on it. There's a lot of thinking and planning going into it. I'm giving myself hours of fun trying to come up with the right name for it that incorporates appropriate, search for terms and so on. Investment clubs, if you're watching this and you're not in one of our investment clubs, or indeed if you are and you want to join an additional one, lots of people do it, then this is a really good time to do it. You've just seen how the clubs are performing and the forecast of how they will perform. You can put in as little as £100 a month, all lump sums. 100,000 is not unusual, and we can definitely work with individuals including with millions. We do have people who put millions into their own accounts, and we train them how to do it properly. Find out more, look at the website, myinvestmentclub.co.uk, or get in touch with me. I'd be happy to put you into a WhatsApp group with as many members as you wish to ask whatever questions you would like to ask. We've got live training coming up in November, evening of Friday the 15th, all day Saturday, all day Sunday. You can book these bits separately, although I haven't put the booking form out yet, as we haven't finalized the venue. On the Sunday, I will be covering in great detail the short-term put strategy that you've seen working so well here. If you want to learn how to do that, that's the place to be. And if you can come for the whole weekend, fantastic. We always have a good time and lots of good debates. And last but not least, my best-selling book is still available. A lot of stuff in there, which is absolutely fantastic. I am actually working on a second book now, but the second book will be a different one. It'll be really a course manual. And it will probably take the format of a loose leaf thing, so that, I mean, most of you who know me and follow me know that I'm constantly updating and changing and tweaking things. And that loose leaf format will allow pages to be changed and to be supplemented and so on. So that's something to look forward to. Okay, I think that's about it for this week. Thanks again for listening, and I'll see you next week.